quick video for Matt, mainly on Matt's request for AWC and how I'd trade it. That's an hourly chart with an obvious downtrend line. Obviously, I'll just go to the end of day chart. That's a daily. Obviously in a fairly steady downtrend, especially this last part which I've pulled up on the hourly. Sorry, I'm making sure this volume's right as I go. Hopefully it's okay. Okay, so the hourly, there's that fairly obvious downtrend. That it's probably a more conservative entry. I'd be looking for a break of that if I wanted to go long AWC. If I wanted to be a little bit more aggressive, I'd probably have a crack at this little, what's going on here? Have a crack at a break of that little res there. So break of 81 would probably be my more aggressive entry. Break of that trend line possibly would be a slightly more conservative, and then maybe even if I wanted to be super conservative, I'd wait until that next 83.5 odd resistance to enter. So it depends how I was feeling about the stock, the market, and stuff like volumes would come into play. If there was big volume on a break, I'd probably be looking at getting an earlier. As Cookie said, an earlier entry just means risking less if you're taking the same position size, or you can take a larger position size and keep your stop the same. So that's something you've got to decide, and I don't have any anything other than discretionary methods of doing that. So if I think, if I've got a really good strong feeling about the market or news with the stock or whatever it might be, buy recommendation, not that they're worth much, I might hit this harder and go earlier. But so there's no set rules, just depends what's going on with the market. But ideally, let's say I buy it here at 81.5, the volume on this hourly starts to pick up, then where would I be looking at? What would I be looking at doing? Sometimes I wouldn't even, the obvious place you would think would be, alright, you're out on a break of 80. Sometimes I wouldn't even be considering doing that. If that broke out of this little range here, and maybe I'd even go to a 15-minute or something like that once I was in, which doesn't really look much different. But if it broke out of that range for me to enter and then fairly quickly popped straight back in it, I might just take my loss. So if I got in at 81.5, dumped back in here, was sitting at 80.5, it just didn't look like it was going to go, I may well try and get them away at 81, or just be happy with 80.5 and be done with it, and then look to have another crack the next time it breaks. So sometimes, especially in this market, I'll actually take 2 or 3 goes to get set in something because I'm just not ready for it to go. So I very rarely take a massive position first up. I sort of really tend to take feeler positions and just see whether it looks like it's going to go, and then I can always add if it does work. So yeah, so let's assume I'm in at 81.5, it dips back here, just doesn't feel right, I'll cover it. If I really was really positive that I wanted to give it a fair chance, obviously I'd set my stop down here, and maybe not even at 79.5, maybe right down to 79 in case someone just tries to trigger that. And obviously position size accordingly. I don't do 2% of my account or any of those sorts of things. I basically work out what I'm happy to lose and position size back from there. So just to make the maths easier, let's say I entered at 81 and I was going to sell at 79, and so I'm risking 2 cents, and let's say I only wanted to risk $200 on it, then I'd take 10,000 shares, $100 a cent, $200 I'll be out. So I really base it on how much I'm prepared to lose. I think that's way better for you psychologically. Then you're getting out at technically relevant level. You're getting out at a level that you'll be safely able to pull the trigger. Now mine might be $1,000 or something like that, but it doesn't matter. Even if it's $20, that's how I would position size. Right, so let's say I'm in, and it starts to bounce. Obviously 83.5, there's some fairly stiff res as well. So if it hit 83, if it hit 83 almost vertically as soon as it broke, 83.5, there's a fair chance I'll be selling a third or a half or something straight away, because for me to get that good of money in like a 2-minute run or a 3-minute run where it just powers because everyone else has been buying the break, is just worth taking it off the table for me. Even if it keeps going, for me that's good, quick, locked in cash, and this market's so volatile that I'm just happy to get out of there. But so I'm looking at areas that could hold it up on the way. So the 83.5, obviously 85 was an area, and then probably nothing to about 88, 87, that area there. I might even whack some fibs on it now. So let's put some fibs on. Actually, what I'm going to do is go back to the hourly first. Hourly chart. Alright, put that back up. Alright, let's put some fibs on this. And I'm getting called for dinner, so I'll try and make this fairly quick. Okay, how about we run fibs from there to there? Gives us some lines. So the first fib is around that 89, a little bit of consolidation here. There's the 88 just there. So let's say that's my first real target. Maybe it held up here a little. I might knock off a quarter at 83.5. Then if it's all nice and steady and it hits 89, I'm not going to sell the lot just because it hit 89, because obviously there's plenty of upside, and if you looked at the daily, there's huge upside still. So to me, there'd be no reason just to knock that off because it got to my first target. So, and I wouldn't even just knock some off because it hit it. If it hit it and then looked like it was going to show some resistance there, I might sell some again. But so let's say, sorry about that, let's say it's spiked up to 83.5. I've sold, let's say, a quarter. It's dipped. If it did dip and then broke through again, I may well add again. So these things become very fluid for me. It's not like a set position. I'm buying, selling, buying. It might break through, then spike to 86, and so I sell. Let's say I've got 20,000. I might sell 3,000 there because they're sitting there, and then it dumps to 84, and then it goes back up again. I might even add on the swing if it feels really good and I feel like I'm in sync with it. It really, these decisions are totally made on the fly for me. So let's say it hits up here around 90, that 80, 89, 90 mark. We're through the fib. We've broken through this resistance. Previous support there was at 90, which might become resistance, and then it starts to go sideways. So let's say this chart has brought a nice upward trend this way, and then it starts to go sideways and actually breaks that upward trend line. Then I might knock off half or something like that, and only keep a quarter. And then again, as it goes on, I might add, take it off, and so on. So it really depends what happens, and I really don't know, Matt, if this is a good explanation, but this would be exactly the same on a daily chart for me as well. I'm just using the hourly because at the moment it's about as much as I'm willing to trend. Now I can't remember what I was going to say. Yeah, conversely, if I bought that and it had a massive spike straight up like that, even to 86 or 87, something like that, 88, if it went mentally up, I'd sell a lot. Probably wouldn't even muck around because you know it's not going to go vertical. Any chart that gets vertical, if I wasn't in it, I'd probably be shorting it. So if I am in it, I want to be selling it. I hope that makes sense. Ask me any questions you want and I'll try to explain it a bit better. Thanks, mate.